Greetings! Thank you for lending an ear to the Voice of the Times for Saturday, March 19, 2022. For today's editorial, next administration's economic policy should focus on productivity. The next president of the Philippines will, among other things, be tasked with setting the overall tone and direction of the economic policy for the next 6 years. That responsibility should be viewed as an opportunity to undo the decades of wrong-headed, market-driven economic philosophy that has caused the Philippine economy to lag behind many of its peers. If you ask any economic policymaker or analyst, which we do quite frequently, they will invariably describe the Philippine economy as healthy, even admirable. The reasons for this approving point of view are always the same. The country benefits from the stable banking system, strong consumer and government spending, and strong fundamentals such as a manageable level of government debt, abundant foreign currency reserves, and relatively consistent and benign levels of price inflation. Behind this rosy picture, however, are some rather less attractive indicators. Of the 10 members of the Association of Southeast Asian Nations, the Philippines ranks 7th in terms of gross domestic product per capita, outdoing only the perennial basket cases of Myanmar, Cambodia, and Laos. The Philippines has the second highest poverty rate behind only Laos, and has the highest degree of income inequality in the ASEAN. This mirrors the highly unbalanced nature of the economy as a whole. Excluding the microstates of Brunei and Singapore, which are objectively more well-off than the Philippines in almost every respect anyway, the Philippines derives the lowest percentage of GDP from industry among the ASEAN countries, and the third lowest percentage from agriculture behind Malaysia and Thailand. The Philippines also had the second highest incidence of poverty among the ASEAN countries prior to the pandemic. In the view of some economists, the problem of waning productivity, and with it the side effects of persistent poverty and deepening inequality, is a consequence of the financialization of the global economy. It is a complex idea, but expressed in the simplest terms possible, financialization is a shift in investments away from productivity, capital formation, innovation, and labor expansion toward investment for the sake of short-term earnings. Financialization manifests itself in various ways on both government and private sector sides. In government, it is characterized by a drive toward increased privatization, protectionism, and in economic management, prioritization of factors such as debt and deficits. On the private sector side, it appears as increasing profits from financial activities, that is, market investments, as opposed to productive activities for non-financial businesses, increasing exposure of the commercial banking sector to non-traditional financial business such as stock investments, and along with that, the erasing of the line between commercial and investment banks with the rise of so-called universal banks, and the corporate decision-making and firm behavior influenced by short-term financial factors such as share price performance. All of these factors contribute to the Philippines' unsatisfactory economic status quo, and while ideas such as income inequality and per capita GDP may be a bit difficult to visualize, even those of us who have reasonably comfortable lives by local standards are affected daily by the negative consequences of financialization. We all endure some of the most expensive and least reliable internet and electricity service on the continent. There's hardly a highway we can travel without paying a toll. We pay about 140% more for common electronic gadgets such as cell phones and computers than the global average. The next administration, if it intends to break what has become a decades-long stagnation, must move away from the priorities that have retarded real productivity in the Philippines. Continuing the economic policies of the last administration, which have simply been a part of a 30-year continuum that has brought the Philippines to its current state, is the worst idea any candidate could offer. Instead, greater attention needs to be given to encouraging more market openness and competition on the one hand, eschewing protectionism by ratifying the Regional Comprehensive Economic Partnership would be a good place to start. And, on the other hand, the government should use the strong fundamentals that are constantly highlighted to make strong state investments in the country in areas such as agriculture, industrial innovation and development, education, training and research, and public utility services. And that's the editorial for Saturday, March 19, 2022. For more news and information, get a copy of the Manila Times on print, subscribe to its digital edition, or log on to www.manilatimes.net. Follow us on Twitter, Facebook, or Instagram, and listen to the Voice of the Times.